Hey there, thanks for tuning in. Welcome to Investing in Germany, and today let's have a quick look on what happened in the market last week. This is a series of video where I plan to track the market on a weekly basis and to present you guys what's happening in the market, and also to focus on my investments and what's happening to my investments and what news are there for me to consider and to make the next move in my portfolio. So getting into today's topic, so we had the inflation data coming in from the Euro area, which was presented on the 6th of January 2023. Of course, this is an estimated value, and then we should get the final one, official one, on the 18th of January 2023. Nevertheless, I don't think there's going to be any change between the 6th and the 18th of January 2023. Therefore, let's have a quick look into the data here. So the inflation, the overall inflation for the Euro area has cooled down from 10.1% in November to 9.2% in December 2022. This is an extremely good news if somebody looks at it from a macro perspective. But if you dissect it and look the details of their presentation here, you can see that it is not showing a really good sign or good trend here. The overall inflation has come down from 10.1 to 9.2, majorly because the energy inflation has come down from almost 35 to 25.7%. All other details of the inflation is going uptrend, and therefore it's really premature for us to say that we have reached a peak and the inflation is behind us. The core inflation data here shows not good sign. It has moved up from 5.0 to 5.2%. If you look at the core inflation data for the last 1 year, you can see it is trending towards the up, and then it looked like that the core inflation is peaking up here, but then again it went up even with the reduced energy prices. This means that our pockets are still getting emptied quite fast than we would like to have it. If you look at the last 25 years of data, we have never been in such a high core inflation data of 5%, and it's still not yet peaked. We still don't know whether it peaked. So we have to wait and watch. But then what we are experiencing now is something that nobody can really relate to in the last 25 years or so. So it's really, really high inflation, what we are seeing it here in Germany. So what's really good news here is that the energy price expectation has come down and the estimation has also come down. 1 month back, the estimation was that the gas price will be at 140 euro per megawatt hour in the beginning of 2024, but then now it has really picked down to close to 80. So one of the main reasons here is that we are having a really warm winter here, or spring winter here in 2023. The Jan and Feb 2023 is really warmer compared to other winters, and therefore we are not eating into our reserves of the gas. So we are having a really healthy gas reserves, and also the supply chain has been really strengthened, moved out of the Russia dependency. Now we have Norway, which is the biggest gas supplier to the German economy, and also we have Qatar and all other countries around the world. We are helping us in managing our gas reserves and gas demand. So this has really helped us in reducing the gas price, and therefore in coming months we should really see the inflation coming down due to the energy prices. And then you can see here Norway, as I spoke, it has become the highest or biggest energy provider or gas provider to Germany. And you can also see that they have also mentioned that the demand in the gas, or the slump in the gas prices, because of the households not using a lot of gas because of the warm weather, and also the companies which are gas intensive has gone down in their production. Let's wait and watch how the next months are going to progress for us in the Germany with the inflation, and I will report it on a monthly basis on that. And moving into the real metrics, the real market, we saw really a big jump in the Chinese stocks, internet Chinese stocks in the last week, because of several factors coming into play in single week, and it has really caused a lot of optimism in the market for the Chinese internet stocks. You can see here the Crane shares, which is the biggest ETF provider of the Chinese internet company, has moved up like 15% in a week, in a 5 trading session. That is really crazy, and it shows how much positive news has come into display in the last 1 week. So firstly, we had the zero COVID policy being stripped off by the Chinese government. So there is no zero COVID policy. Anybody who is traveling into the China doesn't need to quarantine themselves for 2 weeks or so, and they just need a negative corona test results with which they can really enter into the mainland China without any issues. And this is also really a good news coming in at the right time, because we have now the Chinese New Year or the Lunar New Year, where the people are now traveling all the way from all over the world into the Chinese economy, and therefore increasing the demand, which is a good news for the Chinese economy. What's really missing here is the effect of the spread of the COVID or the corona within the Chinese market, and how many people are getting severely ill and struggling to live their life, and how it's going to impact the economy. That's something that we don't know, and we really don't know if we get all the correct numbers out of the Chinese market onto this. But then what is really important for us is that the Chinese market is open. Of course, maybe they are late into this party of opening up the economy, but then they are better late than never. So let's wait and watch how it progresses. And there was also news coming in from the China, where the crematorium were really overwhelmed in the last weeks because of the amount of death they encountered due to the spread of the COVID within the Chinese market. And we have to wait and watch, because there are elderly populations where they were not vaccinated to the optimum level, which leads to a lot of stress into their healthcare. But then this should really peak out, or maybe already peaked. We don't know yet the data, so we'll have to wait and watch until the Chinese New Year is ended. I believe by the time the Chinese New Year ends, we should have the peak already behind us, and from there on, it is all the development into the market and economy. So that's a really good news. And other really good news coming into the Chinese stock is also that the regulators are letting loose those big internet companies and allowing them to launch products and so on. For example, we have Tencent, which just got now the nod to release a lot of series of video games, and this is good news. And we also have Alibaba, where Jack Ma has given up his voting rights recently, which is to facilitate the IPO of the Ant Group, which will be a really big trigger for the Chinese stocks here. And I'm really happy to see this, because myself, I am heavy on Chinese stocks. About 40% of my portfolio or in Chinese economy, and therefore my view could be biased, but then I see a lot of positive trends happening within the Chinese economy, where we can see opening up and the regulator easing out their limitations with the big internet companies, and we have the IPO news coming in, and really good news coming in from the Chinese economy. I hope it just trend continues, and then we could see a lot of good things happening into the worldwide economy, from the supply chain stress and so on and so forth. And then we have the Tesla. The Tesla slashed the prices in China and other Asian countries in Australia and so on to meet their sales numbers, but then they failed terribly. So they were not able to meet their target even by reducing the price, which means that the demand is softening for the Tesla cars, and therefore the Tesla was been hammered like crazy in the last month. As you can see, the last month data, they are down by 34%. And if you look at the peak to peak, they are down like about 65%, something like that. It's a really crazy dump. And the question is it now investable, or is it now cheap to buy? From my point of view, it is not cheap yet. Based on my valuation, it has to come down by another at least 40 to 50% before I look at this stock or business to evaluate for investments. If you look, the Tesla is an auto manufacturing company. You have to evaluate the Tesla similar to Volkswagen, or similar to Toyota, or similar to GM or Ford, not like Amazon or some other fancy internet companies. So Tesla is end of the day is a car manufacturer. They create free cash flow through selling the cars, or the major cash flow is coming through selling the cars, not by selling technology, or not selling by selling advertisement and so on. So we have to evaluate Tesla as a car company. If you compare both the valuation of the other car companies with the Tesla is still at least 50% or 100% costlier than the other car manufacturers like Mercedes-Benz or Volkswagen, Toyota and so on. Therefore, I would not really invest at the moment in Tesla. Of course, this is not recommendation or something. It is just my view based on my valuation method. And it's really crazy to see that even after 64%, it's overvalued, and people, they don't value the valuation. End of the day, the price is what you pay and value is what you get. and over the long period of time, the price will go towards the value, and therefore you have to pick up those businesses where the price is close to the value. And finally, we have Andy case from the Amazon, the CEO of Amazon, saying that they're going to lay off 18,000 people in the coming weeks and months. So this is also not a really good news. And Amazon is not the only company which is starting the layoff. We have Meta, Google, Microsoft, and so on, all reducing their workforce because the demand is not what they are expecting a couple of years back, or a year back. So now they are trimming down to reduce the cost and then to see how they want to proceed with the next leg of development. That's it. Thanks for watching. See you in the next video.